Good morning, investors, and welcome back to another video brought to you by Your Financial Independence. Now, I know you may be asking yourself, Your Financial Independence, where have you been the past 3 weeks while this market's been crashing? Well, I've been on leave. So me and my wife, we both took leave. We went to Gatlinburg and Pigeon Forge, Tennessee, the Great Smoky Mountains. It's one of the top travel destinations here in the United States. Had a fantastic time, went to Dollywood, went to all the Ripley's, had a really good time, spent a lot of money, but you can't really think of it like that, family time. We also visited my parents, my grandparents, had Thanksgiving, all that good stuff. It's the holiday season. I got some friends from Luke Air Force Base. They're coming down here for Christmas, so yeah. Been kind of busy with family, but this hustle is not over. I'm not off of YouTube or anything like that. We're going to get back to making videos. I told myself before I left, I was like, you know what? I'm going to tell everybody that, hey, I'm not going to be here for 3 weeks. I think the only person I told was Daniel Pronk. And yeah, I forgot to tell everybody, and I was having such a good time, honestly. So sorry about that. That's my fault. But now to get on with this video, the reason why y'all clicked on the thumbnail, and I appreciate y'all for watching. Make sure you subscribe, hit the bell notification, got to plug it in here. We're going to talk a little bit about the market, what I've been doing, what the entire market's been doing, and kind of get into one of the theories that a lot of investors kind of are thinking. So I want to go ahead and show my portfolio right now. I did narrow down my positions. That's not to say that these other positions, like HIMS, that's not to say like these stocks are bad, which I don't believe. I believe HIMS is a great company. It's going to return a lot of equity to investors over time. But I kind of found myself, Peter Lynch, know what you own and know why you own it. Kind of that theory. So I have 6 stocks right here. These are 6 stocks that I truly believe in for the long term. Have great understanding about the company, know where they're headed, what direction the company's going to be going in the next couple years. So yeah, I was a little over diversified for the amount of money that I have in stocks, I feel like, personally. So we'll get into this. Chewy, I have 140 shares. Corsair, 150. I need to up that. That's one stock I do need to start buying even more. Palantir, 425 shares. Planet, 1,800 shares. I got to add to that. SoFi, 515. Pretty happy with where I got for SoFi right now. I should be adding around this $15 range. But just like a lot of investors, a lot of money right now is a little short. Unless you're making a bunch of money off of YouTube and stuff, or you have a really good business or something, your money's pretty short right now. That's what a lot of investors, because we've been buying the dip. And then Truly, 465 shares. That is my top holding now. But at the same time, I have so much confidence in that company, and it's at such a low, price to sales right now. I need to get that number to 5, maybe 550. That company long term is phenomenal. It's going to return so much money to its investors. Okay, so that's what I've been doing. Now let's look at the market. We have the S&P 600 right now, the forward PE ratios. Large caps are still at a 21.2. Mid caps a little bit better, 16.1, and small caps of 14.8. I believe this is for the S&P indices. So the market is still, large caps are trading really high right now. Small caps are getting, they're still getting destroyed. They're still not going anywhere. Nobody knows when the shift is going to happen. And let's say large caps don't even go back to, obviously you can tell 16 is, kind of still somewhat high for them. If you look, it's middle ground on the chart, it looks like. Let's say the large caps, they go to a forward PE of 18. Well, that's still, a lot lower than they are now. We're not saying that it's going to go from 21 all the way down to like 15. Like the transfer is going to be that big, because that would push mid and small caps up tremendously. Let's just say it goes to 18 or so. Mid caps and small caps are going to still rebound substantially just from that little bit of a move. If you have trillion-dollar companies that go down, these little billion and $2 billion companies, $2 billion goes to them, it doubles their market cap. Whereas, if Apple loses $2 billion, that's like nobody would even break a sweat. So that's kind of what we're looking at in the market. And one thing I really want to point out is now 6 tech stocks make up half of the NASDAQ 100. It's just overweighted in my opinion. And the market goes through these times. It goes through these times that's super bullish on these couple companies. And small caps, I'll forget about them. Just invest all your money in Tesla or Amazon or Google. Microsoft's really been killing it. That company really, Microsoft has been killing it. But the market right now is just like, yeah, you might double your money in this right here, but this is guaranteed, 20% a year or 25% a year. We go through these time periods, and eventually the market is going to start looking at some of the forward PEs, the price to sales. Nvidia, it's a great company, but the price to sales on that and the forward PE right now for how much that they are going to grow in the next 2-3 years, it's not a good value, even for a growth stock. And I'm a Palantir shareholder, so I know about paying for growth in the future. That price to sales is like in a 20 or something like that the last time I looked at it, which has been a while. But you get to looking at stuff like that, and the market, it's never really that consistent. There's always something to worry about. There's always, this stock is the next Tesla. We heard that a lot. So I feel like you get what I'm trying to say here, and I'm going on a little bit. But now we can look at some of the percentages for the NASDAQ 100. Apple now makes up 12%, Microsoft 11.3%, Amazon 11.2%, Facebook 4.2%, Alphabet or Google, better known as 3.8%. And then Google again 3.8%, and then Tesla 2.7%. All of these stocks have done tremendously well. And one chart that I couldn't look at, I couldn't find, so shout out to Emmanuel Finance. He found this chart. Honestly, I knew the NASDAQ would be down year to date a little bit if it wasn't because of these stocks, just because they hold so much weight, and look at all the other companies in there. I was thinking year to date on the NASDAQ might be down 5% or so year to date without taking off the top 5 stocks. I had no idea that it would be down over 20%. If you take the NASDAQ, take off the top 5 stocks, it would be down 20% year to date. And he made that video Friday, I believe. Today's Monday. So it goes to show like we are in a bear market right now. I've been feeling that. If you've been investing in small caps, you have been feeling that. So this is my 2 cents. Let me know in the comment down below what stock you want me to review, any news, and HIM stock and other stocks like that I'm still going to be making videos about because I love the companies long term. I just personally felt like I was over diversified. That's the only reason why I sold out of those. And I'm adding to stocks that honestly could go down 50% tomorrow, and it would not hurt my feelings at all. I would just keep buying because I love the companies. I know everything about them. The majority of stuff there is to know about them. So yeah, at this point, I'm rambling on. I hope you all have an awesome, amazing day, and thank you for watching. Make sure you subscribe, like, and comment, and catch me back on the next video.